Last time we were on, we were talking about buying the dip, and essentially you're like, yeah, the dip, buy the dip. One name we kind of looked at as an example was NVIDIA, but NVIDIA keeps coming down a little bit, and it's getting hit today because the number one stock in the S&P, Broadcom, may be making some inroads there. You know, everyone's coming after NVIDIA, but you still think that this is sort of the place, one of the stocks to be in, and for a variety of reasons.
Yeah, look, it's good when you have competition, right? Competition gives you a sense that the market is real, right? And so that's not necessarily a bad thing, right? So Apple has competition from Samsung, and you might have just given up on your Apple stock years ago when Samsung started making their smartphones, but that would have been a silly investment, right? NVIDIA still has this big moat that we talk about. Broadcom's is also a great company, and both companies are well run. So it's not an all or nothing game.
And it's a big enough space for more than one champ.
Hey, shares of Broadcom soaring to a record high on blowout earnings and revealing it secured $10 billion in new orders for custom chips from a customer. Joining me now is top chip analyst Bernstein Stacy Rasgon and Broadcom shareholder Blue Line Capital's Bill Baruch. Thank you both for being here. Stacy, there are reports out there that it's OpenAI that's working with Broadcom to develop a custom AI chip. What do you see as the implications of that?
Yeah, by the way, it's been speculated that it's OpenAI. It's plausible. Whoever this is moving very, very quickly. Seems to sort of fit with their persona. No, this is really important. You have to remember, Broadcom had 3 customers that were shipping these AI chips. It was Google and Meta and ByteDance. They had 4 others that were prospects. So one of those prospects, this one, is now converted into a customer. And it is a tremendous amount of revenue. They said $10 billion next year, which is a very fast ramp relative to anything we've seen before. And they're implicitly guiding, effectively their AI revenues next year well over $40 billion. It was like $30 billion as of last quarter. And I don't know that it stops in 26 either. They sounded fairly positive that it would continue into the years beyond. And so, frankly, it starts to remind me a little bit of the revenue ramp we started to see for NVIDIA like several years ago when this really started to kick off. And if you think that those numbers are anywhere plausible, all of a sudden, the earnings power of this company starts to go up very, very strongly. And, the stock has been fairly expensive, but, it starts to realize maybe it's not as expensive if you actually think the earnings prospects are as strong as maybe they are suggesting. And so I'm actually not surprised that it's up as much as it is today. And I don't know that the story at this point is done.
Yeah, and on the flip side, you've got NVIDIA down potentially a bit on this idea of diversification of the supply chain. Stacy, I'm just curious whether you think NVIDIA has some real competition and whether its share is seriously threatened at this point.
Look, so the whole GPU versus ASIC debate goes back and forth, right? And right now the narrative, at least today, is clearly shifting toward Broadcom. They do go back and forth. I actually don't think that the right question right now is necessarily who's winning or losing. I actually think personally the question is better off to be put, is the opportunity in front of us still large or is it not? Right. I think ASICs will take share. They're coming from a smaller base. I don't think they dominate. And I think if the opportunity in front of us is still big, if we're still early in this, as I think we are, I think they can both thrive. Because think about it this way. If the opportunity in front of us is not still big, they're both screwed.
Right.
So that's the right question right now. I think not as much who is winning or losing. But in the heat of the moment, clearly that narrative today is going to shift more toward Broadcom. We're in that phase of the cycle.
Well, let's ask Bill that question about the rising tide lifting all boats and potentially the tide washing out there. Bill, you're a shareholder of both NVIDIA and Broadcom. What do you do with today's developments?
I don't think that they're going to compete against each other and one would harm the other. I think that what you're seeing here is the multiple, the high multiple in Broadcom. You're paying for this flexibility. They helped Google or Alphabet ramp up the TPU. And now, although that relationship has changed, the flexibility here in helping OpenAI potentially ramp up what could be the XPU, an inference chip. And I think that pivot allows, takes some pressure off the lack of GPU chips that are on demand for NVIDIA. Now, we don't look at this as there's a one winner. We own both. although currently we're a little underweight NVIDIA to the S&P, and we're quite a bit overweight Broadcom to the S&P. I think there's a lot of runway here, and I do agree with Stacy that this does remind me of what we saw in 23, where the revenue growth, the ramp up that's coming next year in 2026 for Broadcom. It reminds me of NVIDIA. I mean, we're seeing 60% revenue increase forecast for 26, but let's not forget you have the software infrastructure, and that's still nearly a 50% revenue forecast increase too. So you got the diversified revenue streams, and we love Broadcom. I'm a little patient here. We wouldn't be chasing it. I do want to increase. We trimmed it recently just because we were so overweight. I would be looking for a pullback, somewhere, at least the 315, 312 area, but we could get a move to 300 if the broader market kind of softens a bit.
Yeah. So what does this say then, Bill, about the amount of gas left in the tank for the AI uptrend? It sounds like neither of you really believe that, there's much of a slowdown as was feared a week or two ago.
I mean, this is the early innings. I think you're starting to see it right now. I mean, look how the market itself, broadly, with the Nasdaq. I mean, it's continued to run, and I mean, not only that, you're starting to see green shoots within the economic data. Look at the non-farm productivity yesterday. That could really be tied to starting to see AI being implemented. I'm also, hearing that, from a Mag 7 company, that you're starting to see some of the lower echelon employees being forced to work on these AI workflows. I think down the road, you're going to see a lot of those jobs being taken over by AI, and they are essentially training AI right now. So there's going to be a lot of haves and have-nots within the market and who's going to benefit from it. But right now, it's an AI arms race. The spend has to come in, and these companies, the market is appreciating, and it's giving way to the spend. It's increasing the market itself. So I think there's a lot of runway here, and I'm excited to see how this year finishes, but really 2026 could be a tremendous year.
Now let's switch to the AI trade because it delivered drama on both sides today. Broadcom hit an all-time high. It surged, closing over 9% higher on strength across its VMware software business and growing AI custom chip backlog. But the main driver for Broadcom is landing OpenAI as a new $10 billion customer. And this reignites the custom chips versus NVIDIA GPU debate. Is the AI pie expanding enough for both players and a few more players, or is Broadcom stealing NVIDIA's lunch? NVIDIA closed lower. You can see almost 3% lower, suggesting investors maybe are picking sides today, possibly profit-taking. NVIDIA wasn't alone in the penalty box. AMD dropped about almost 7% today after Seaport Research downgraded the stock, citing concerns about the chipmaker's AI business momentum. Bottom line, though, rate cut hopes are definitely reshaping sector rotation within the markets, but the AI chip wars are far from being settled. Guys?
We start off with a big divergence in the two biggest semi-stocks in the market. Broadcom surging more than 9% to a new record after announcing it had received a $10 billion order for AI chips from a single customer widely thought to be OpenAI. The stock was the best performer in the S&P, valuing the company at more than $1.5 trillion. NVIDIA, meantime, moved sharply in the other direction, the stock dropping more than 4% at its lows, notching its sixth down day in 7 sessions. Shares have now lost more than 8% since the company reported earnings just last Wednesday. The stock lower as well. So is Broadcom's gain. So lead to pain for everyone else in the AI trade? I think that's a big question, especially when you see this sort of transfer of market capitalization, Tim.
It's fantastic, and I would argue that the numbers, at least outside of the order you just discussed in terms of where Broadcom has now announced, and it's exciting, and is that NVIDIA's numbers were fantastic, but the stock has struggled, and it's struggled certainly along with the broader semi-space. If you look at the broader semi-space, wasn't a good day for AMD. It was an okay day for Taiwan Semi, and I think some of this differentiation is simply some rotation. I don't think there's anything in terms of the bottom-up stories in both companies that have changed. I think the story in Broadcom is extraordinary. The price action as a function of that order, I think, is exactly what you wanted to see if you're an investor, because we sat on the desk last night. We looked at those numbers. We looked at some of the dynamics on margin in terms of sales and where they were, their customer base, and it seemed as if it was set to kind of hold serve. This latest round of news really pushes it higher. Yeah, Bernstein's Stacy Rasgon was saying that, on a call back with the company, they basically indicated that the AI spend was actually accelerating, and that's when they'll reach staggeringly large numbers. The rotation, Mike, I thought was interesting, as Tim mentioned that, we saw that happen today, and yet
it is a rotation from NVIDIA to a higher valuation stock. So it's not clear that that rotation should have happened.
It does if you think about it from the growth perspective, I think. I mean, and this is really a result of NVIDIA's comments when they reported, and they basically said that, we shouldn't necessarily anticipate that the pace of growth was going to be continued indefinitely. They hinted that they outright said it, right? That the growth rate was going to slow in the future. We should probably have expected that. We're getting to a point where the amount that was being invested in their product, there's even the hyperscalers run out of money at some point. So the exponential growth was going to have some sort of functional limit to it. Broadcom just had a little bit more room, and the growth rate that they're projecting right now is a little bit higher, and that supports a higher multiple.
This is the ultimate would you rather in the market today, Carter. The market spoke with the gain in Broadcom, but what do you say?
Yeah, well, for starters, on a 2-year basis, they're about even now, right? So one has come off and one has popped. But the intraday action is, there are two ways to interpret it. A stock that gaps up on news and makes an important advance is in principle a bullish thing, but the stock closed on the low, which is, say, intraday, right? It couldn't stick its landing. A great gymnast trips it and then lands versus wobbles. It wobbled badly. And volume was heavy, about 26 billion in value traded. My hunch is that it will fill this gap that it left behind from today's news-related pop. Long way to answer which one here now. Still a AVGO because at least it's doing something positive. NVIDIA has broken trend. And finally, let's just say this, and Tim makes this point. The stock still has not exceeded its July high. That's a problem. What's left? News from AVGO? Well, that's out. News from NVIDIA? We heard from NVIDIA. What is it that pushes semis higher now below where they were from July of a year ago?
T. Rowe Price's Tony Wang joins us now on set. He manages the firm's science and tech fund, whose top holdings include NVIDIA, Apple, and Broadcom. Tony, great to have you with us. Welcome to the NASDAQ market site. In terms of the action that we saw today, maybe not surprising that we saw AVGO go up so sharply, hitting a new high, actually, in today's session. But in terms of the market capitalization transfer from NVIDIA to Broadcom, or what looked like to be a transfer from NVIDIA to Broadcom, what do you make of it? Should we draw out a bigger story based on this?
Yeah, I think, the price action makes sense, I think, in the near term. Essentially, Broadcom is expanding its customer list. I think a few years ago, only Google was the custom player, and then now they're going to 4 players and with OpenAI. And so I think that naturally they're coming off of a smaller base, they're growing, they're accelerating. I think that makes sense. But if you take a look at the longer term picture, I do think the TAM is expanding. Essentially, we're moving from one-shot kind of ChatGPT models to now long reasoning. And so it takes longer, it takes more compute, but you have better answers. And so I think overall that's like very TAM expansionary. If you look, we've had this debate, right? Like over the last 5-10 years, and both stocks have done really well as leaders in the market.
Okay, so the TAM expanding, meaning the total addressable market expanding.
Yes.
Lifts all boats, lifts NVIDIA and Broadcom only. I mean, how should we look at that? Is the TAM expanding specifically for Broadcom?
Yeah, I think it is lifting like a lot of boats, I would say. But increasingly, the compute is getting harder to do. And so it really plays to the number one in GPUs, and I think the number one in overall like custom ASICs. And so those are the two players, I think, that benefit from the scale and R&D and the flywheel that goes with it.
So that's, Tony, great to be here, great to have you here. And let's drill deeper into this whole idea of addressable market, because one of the things that I sense on a day like today is when we talk about Broadcom, we're talking about not just AI and deep learning, but we're talking about data center, we're talking about wireless, we're talking about this is a more diversified chip play, right? And after the kind of move that's been so AI-centric on a day when people are starting to question at least some broader elements of the economy and the market. I'm not sure that we're supposed to do a whole lot more than just think about them on a payroll day. I don't think the world changed today. But is that the story? Is it that Broadcom really is broader? And will this give more sustainability to this relative value trade today that's not really relative value?
Yeah, so I think that Broadcom has a lot of different businesses. They're very broad-based, and you're seeing the broad-based business also recover too. Meanwhile, AI is actually accelerating. So you have these two growth engines that are probably working in a good way over the next 12 months. But in terms of what's really breaking the stock out, I do think it's the AI number. I mean, Hawk over the years has been pretty he doesn't like to get you too excited about like semis all of a sudden growing. But like here, I mean, I think that growth is real. And so with AI adding a leg of growth here.
It does sound like, according to the analyst notes that I read, that he was very positive, very sort of guiding people higher. Have you talked to Hawk? Is that the message that you're getting even away from the earnings call?
Yeah, absolutely. So, I mean, Hawk has been incrementally bullish, I would say, every quarter over the last couple of years. And usually Hawk tries to keep us, pretty tempered in our expectations. But I do think this is a change of tone just because it's become such a big market and they are so well positioned with custom.
Good growth can make your years part of your portfolio. NVIDIA, therefore, has been the stalwart, even though it's down 5 of the last 6 days. Oh, boy, I guess it's times have passed for NVIDIA. But you know what? I don't care. I say ain't broke, don't fix. Who's the NFL equivalent for one of the greatest stocks in history? I can only mention the aforementioned Jamar Chase as the NVIDIA of your fantasy team. He cemented himself as the best receiver in the league last year, which is why he's now the highest paid non-quarterback in league history. So Chase is now expensive, just as NVIDIA seems expensive at any given time. But when you look back, I bet they'll both be worth the price, meaning that the price-earnings multiple turns out to be not that high as the earnings continue to ramp.
All right, I hope you're all doing great today. First, I'll just briefly mention that I think there's plenty of room in this market for both NVIDIA and Broadcom to succeed as there is such strong demand. I'm not going to repeat everything on this topic as I've talked about it multiple times in recent videos. But the bottom line is that there is demand for both NVIDIA and Broadcom's products, and I don't view this as a zero-sum situation. NVIDIA's GPUs are highly versatile across many different tasks, and Broadcom's custom ASICs are highly efficient at the specific workloads they are optimized for. Google is a great example of a company utilizing both general-purpose compute and custom ASICs. Google uses their own TPUs, which Broadcom helps produce, for their own internal workloads at Google. At the same time, Google invests heavily in NVIDIA's latest products to then offer that capacity to their cloud customers. As demand for Google's AI tools and apps increases, they will need more TPUs. And as AI demand grows, Google will also need more hardware from NVIDIA to satisfy the needs of their cloud customers. And so again, I do not view this as a zero-sum situation, and I think there's plenty of room for both NVIDIA and Broadcom to succeed. Now I want to talk about 2 pieces of NVIDIA news that broke this past Friday. First, NVIDIA announced that Germany's Jupiter supercomputer is officially online. This is Europe's first exascale supercomputer, and it is powered by NVIDIA's Grace Hopper platform. NVIDIA continues making great progress on delivering sovereign AI around the world, and I'm especially looking forward to NVIDIA's Q3 and Q4 earnings reports, as we should start to see revenue from certain large-scale sovereign AI projects show up either as revenue or revenue guidance on those reports. The second piece of NVIDIA news that broke on Friday was NVIDIA posting a statement on X about the GAIN AI Act, saying, quote, "The U.S. has always been and will continue to be our largest market. We never deprive American customers in order to serve the rest of the world, and trying to solve a problem that does not exist. The proposed bill would restrict competition worldwide in any industry that uses mainstream computing chips. While it may have good intentions, this bill is just another variation of the AI diffusion rule and would have similar effects on American leadership and the U.S. economy. Put simply, the proposed GAIN AI Act would require that AI chip makers like NVIDIA and AMD prioritize sales of their high-end chips to U.S. customers, making sure that all U.S. demands are met first before they can export any chips abroad. I understand the rationale behind this bill, but I honestly think it would turn out to be a strategic mistake on the United States' part if it were to pass. Let me quickly explain why. It is in the United States' best interest to export the American tech stack around the world so that developers around the world continue to build on and continue to be dependent upon the American tech stack. If NVIDIA is restricted from selling abroad, developers around the world will look for alternatives to fill the gap, including alternatives that are not from American companies, including alternatives produced by Chinese companies. Restricting the export of the NVIDIA stack around the world would be a strategic blunder on the part of the United States, as it would reduce global dependency on the American tech stack, and it would also open the door for foreign competitors to gain market share around the globe in various markets. NVIDIA does not withhold their products from American customers, as they mentioned in their statement, and so I don't think there's any issue here in the first place. I also think this bill is overreaching in its scope. For example, it's my understanding that this proposed bill would place export controls even on NVIDIA's H100 if domestic demands are not fully satisfied. For reference, the H100 is the 4th generation down from NVIDIA's Blackwell Ultra that is ramping right now. And so, based on my understanding of the bill, I think the bill is overreaching, and I think it would turn out to be a massive strategic blunder on the United States' part if it is passed. The United States should want the rest of the world to continue building on NVIDIA's platform and to continue to be dependent on the American tech stack. Giving up that advantage would be a massive strategic mistake. Please keep in mind that I am politically independent and nothing that I say is motivated by politics. Looking ahead, we have 2 NVIDIA events. First, we have the Goldman Sachs Technology Conference this Monday, September 8th. This event will have an impact on how the stock trades in the short term, as this event is geared toward the financial community. Last year, the stock rallied as Jensen spoke at this event. I have no idea what the stock will do this year, but I'm saying that this event is important to watch when it comes to the stock's short-term price action. Then in October, we have NVIDIA GTC in Washington, D.C. with a keynote from Jensen Huang on October 28th. Jensen told us on the NVIDIA earnings call that he is anxious to share more details about Rubin with us at GTC. I'm also curious to see if we will get an update on NVIDIA's progress in quantum computing at this GTC event. Jensen told us earlier this year that the next generation supercomputers will have a QPU assigned with QPUs connected to GPUs. It was also just recently reported that NVIDIA has invested in Honeywell's Quantinuum. As a reminder, NVIDIA opened a new quantum research center in Boston earlier this year. And Jensen told us earlier this year that NVIDIA is already working with just about everyone in the quantum industry on NVIDIA's CUDA-Q platform. NVIDIA is going to play a crucial role in the future of quantum computing, and I'm looking forward to hearing an update on NVIDIA's progress on that front. In addition to quantum, there are other important growth opportunities ahead for NVIDIA that are in addition to NVIDIA's large hyperscaler clientele. We have sovereign AI, as I mentioned. NVIDIA is also bringing AI to the world's enterprise IT, which Jensen believes is an opportunity worth hundreds of billions of dollars. We also have many AI-native startups that will also fuel more demand for NVIDIA's products on top of the demand we've already seen from the hyperscalers. Additionally, we also have NVIDIA's future in AI robotics, as I discussed in more detail in my last video. I think AI robotics will eventually be a major revenue source for NVIDIA, and I think it could possibly even be bigger than NVIDIA's current data center business, which is crazy to think about. All of these additional growth opportunities, sovereign, enterprise AI-native startups, AI robotics, and quantum, make me even more confident in saying that I think most analysts are still largely underestimating NVIDIA's long-term growth. Looking ahead, I really like the setup for NVIDIA through the remainder of this year into 2026, as we should have a convergence of multiple positive factors. Blackwell Ultra is ramping very quickly, and we have an acceleration of revenue growth based on NVIDIA's Q3 guidance. We should also start to see revenue from certain large-scale sovereign AI projects show up in either revenue or revenue guidance on NVIDIA's Q3 or Q4 reports. And I also think we're going to see a surge in compute demand fueled by agentic AI that extends well into 2026. Jensen seems to agree with this idea, as he said on the earnings call that he expects reasoning agentic AI to be a major growth driver in 2026. I continue to be bullish on NVIDIA long-term, and I seriously think this company still has a lot of runway ahead of it. I expect NVIDIA's data center business to continue growing strong for some time, and there are also many other growth opportunities that NVIDIA is really just starting to capitalize on. I am not overly concerned about NVIDIA's customer concentration at this moment, as I've discussed in previous videos. I also do not think that we are anywhere near a bubble-bursting type of event, as I've also discussed in previous videos. And we have a very clear data center product roadmap for the next 3 years. Blackwell Ultra is ramping quickly right now. Rubin is on track to launch in 2026. Then we're expecting Rubin Ultra in 2027, and then Feynman in 2028. And Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030, which means he expects growing AI demand and an expanding total addressable market underpinning all of this. I seriously think we are still in the early days of AI, and I genuinely think NVIDIA is going to be worth substantially more in future years than it is today, regardless of what happens in the short term. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.